Yeah, good afternoon everyone and welcome all panelists. I think you can't have a better combination of the panelists here who is, with respect to topic. You have a banker, you have insurance, you have the tech enablers, right? So we'll get started. I think bank insurance relationship goes along, right? I don't know, Sanjiv sir will talk about that, how long is the relationship, right? And I think banks have been playing a bigger role into selling insurance product when their bank customers are there, right? Be it on the direct selling of some of the products or bundling with some of their banking products like home loans and other products, right? So that relationship is there. Now it has been transitioning from that direct RM-led product push to the kind of the relationship, right? Based purpose fulfilling kind of the relationship, right? So with that context, I'll get started and we'll first round, I'll request the panelists to just have an introduction and then share the thoughts. So I'll start with you, Sanjiv sir. I think you have been on both the side of the spectrum, right? So how do you see, maybe you can share your initial perspective that how the entire bank insurance has evolved over a period of times, right? From the direct product-led transitions to advisory relationship.
Thanks, Jank. First of all, I'm still wondering as a speaker, which one is a more graveyard session? The pre-lunch, the post-lunch, this is actually the lunch one. So you can, and you can see with a lot of empty chairs, Dinesh and I were walking into the room. हम आपस में बात करने वाले हैं because we don't have a big audience. But thanks for the people who are fasting today and still have been around.
We have make sure that everybody can get.
And there are some people whom you are paying to just be there. So, no, that's on the lighter side. All those people who are getting paid also share some things with us. Coming back to this point of how long this association has been in India, the private sector life insurance licenses really opened in 2000. 2000, 2001. You see the first wave of private sector life insurance companies, general insurance companies coming through. So it's about 25 years old. Around 2002, 3 are the ones where the first set of bancassurance relationships happened in India. And the model was borrowed from the Southeast Asia and the European countries, because most of the partners, most of the insurance companies who came here and partnered with the local entity came from these parts of the world. So you have practices that got borrowed from there. Over the last 25 years, both in life as well as non-life and health, I have had the good fortune of seeing this journey almost 21 out of 25 years. And I have seen this evolve over a period of time, both in terms of the way the products get manufactured, the products get placed, the products get sold, and they get serviced. And that has evolved. And Sabir was talking about how it is going to continuously keep evolving with that question around why is it so complicated. I think the complications were significantly higher 20 years back. So I'm glad you didn't ask this question that time, but they would have found it very difficult to answer this. So now I think both with the help of the regulator, some has been forced and some has been out of the need for survival and sustenance. I think insurance companies, the distributors like banks and other distributors are beginning to orient themselves on more consumer-friendly approaches rather than a product-based approach as well. As banks and as bancassurance partners, one of the things that we look at is how do we place this in the overall life cycle of the consumer. I'll give you a simple thought. Any consumer, any customer, each one of us fundamentally have a banking relationship for two fundamental reasons. One is protect and another is prosper. And I'll expound on this. Whatever you are earning, whatever you have earned, you go to a bank and say that I want to open a savings account so that the money is not kept at home. It is protected from theft and burglary and fire and all of that. Second is I want the money to grow. I want the money to keep growing even when I am sitting idle, for example. So you want to make your wealth grow. All the banking products, wealth management products are fundamentally catering to these two needs, protect and prosper. Insurance has a role to play in both protect and prosper. I'll give you a 360-degree view around insurance. The products that we typically sell, on the life side, we have a protection product, which is a pure term, which is basically saying protect the family's income when the earner is no more there. What does protection mean? It says that उनकी salary आते रहे भले वो चले जाएं. On the saving side, the promise is that you have certain goals that are 10 years, 15 years, 20 years down the line. It can be your kids' education, it can be your children's marriage, it can be your own retirement. You start putting in a kitty which will become a large sum so that your goal is protected and you can have that goal getting fulfilled. On the asset side, whatever you have earned, you have either put it into a home or you have a factory if you're a businessman or a restaurant, whatever. You are selling asset insurance to protect that money that has been spent. You are not protecting the property. You are protecting the money that has gone behind buying that property. So whether it's a content insurance, it's a fire insurance. Similarly, on health side, we say health protection. We don't protect health. You basically protect your savings from going into the medical hospital when the medical bills are coming. And it is protecting the person's savings. So insurance largely meets all these 360-degree needs of protect and prosper. Unfortunately, most of us feel the need very strongly when we can't buy it. So if you don't have a health insurance, and God forbid you are hospitalized and the bill is of 10 lakh rupees and you don't have health insurance, you want the health insurance today. But you can't buy it for this hospitalization. So the irony of this segment or category is that the need is felt very strongly when you unfortunately can't avail of it. And that's the challenge that both insurance companies have as well as distributors have to unearth that need and make that customer realize, make each one of us realize that it may happen and hence you need to do it today.
Thanks, Sanjiv. I think it's good perspective that you have given to the topic. And Anu, I'll come to you and maybe we can just have a quick intro. And then given an insurer perspective, though Sanjiv sir has already given some of those pointers, right? But from your insurance company perspective, that how this entire the bank-insurer relationship is getting shaped. What kind of the role that insurers play into that relationship?
So I think firstly, I just want to say the importance of, talk about the importance of banks when it comes to the, we have a common credo in the industry, thanks to the regulators, about insurance for all by 2047. The importance of this particular credo can only be fulfilled when it is the entire banking ecosystem integrated with the insurance ecosystem and then reaching out to the customers who are firstly not covered at all and those who are either undercovered or are in need of some kind of a cross-selling of different products. So I think one of the things that from an insurance perspective, I can tell you this, that the open architecture has been a great boon. It's a where now we have 9 players in each segment where we can reach out and look for customers who are still not insured or, come up with products that probably meet those particular segments within a bank, right? So, of course, there are many segments. Here I will specifically talk about PMJJBY, which is like the, it's the signature product for insurance for all. And that is one product which I believe is affordable to everyone, whether it is, it may be more for people in the rural parts or people who cannot afford very high premiums, but it is affordable for everyone. It is accessible through the banks. Now here we are talking about different banks. I mean, there are large banks. Of course, my organization has been fortunate to have Union Bank of India and Bank of India as 2 of the branches, and we have about 19,500 branches from where this product is sold. However, what I'm trying to say here is that whether it is a small bank or a large bank, insurers need to have the support of the banks digitally as well as digitally as well as physically to ensure that the first, ultimately the first point of contact is always the SP, the specified person. And there it is important that we are ensuring all the digital tools required to explain the product, firstly understand the product themselves, explain the product to the customer, and then finally ensure that whatever be the outcomes are also something that he is able to get, whether he's sitting in a remote place or whether he's sitting in a metro. So it is important for us as insurers to first take care of our customers and our distributors, and here the distributor doesn't just sit at the head office, the distributors who are sitting as the first line of contact for the customer. So for insurers, I think a lot of it is about training, a lot of it is about ensuring our processes are streamlined and predictable, right? Today, there was a lot of conversation around underwriting and claims. I think these are the 2 points where we make or break our impression about our industry. And if we are looking at, trust for the longest time, like Sameer said, 40 years, 50 years of trust, it will take a lot of effort. And insurers alone cannot do it. It will have to be done with the distributors, in this case, of course, the banks. Because, so in the last 2 years, I was looking at some of the numbers. So the banks are now covering about 31% of the entire business that is being done. 31% of it is coming from the banks. The agency business has gone down. And because there are alternate sources through which people are accessing, insurance products, I think it is a great scope for the insurance companies to ensure that we are building distribution systems and we are meeting customers where they are. So if they are a digital native, let's be there. Let's talk to them in languages which they understand. And whether it is, with the bank, or whether it is directly, or whether it is through our other distributors, I think all of this ultimately will culminate into the, the unified vision of covering all Indians by 2047. So I think there's more to talk, but I'll just, pass on and then we can talk more.
Thanks, Anu. Thanks. That's great perspective from the insurers. Ayan, I'll come to you. Anu already spoken about the open architecture, right? And great to see that platforms are getting built to enable the faster distributions, and Zopper is one of the leading things. And you work on both the side of the bank and insurance. So what is your experience when you partner with the bank and insurance, which is trying to simplify the product access, at the same time it's take care of the compliance, operational issues?
So this has been a difficult question if you ask me. I have been fortunate to be working with, as part of Zopper, with almost, the entire banking industry on one side and the insurance industry on the other side. Typically like David among the 2 Goliaths. We work with almost 45 insurers today out of the 56 in the industry. And on the other side, almost 2,500 such, distribution entities. 2 of my co-panelists here, actually I work very closely with them. Having said that, the way it has moved forward in the last, I would say, 10 years has been significant. When we started the entire journey, and Anu just mentioned that, Bancassurance is now commanding almost 31% of the premiums in the market. Larger segments in the market are in the north of even 50%. And we know that this industry started, as Sanjiv also mentioned, in 2000. At that point of time, there were basically, good financial clubs in the country, right? And these clubs decided to start various aspects of the financial industry. And that led to one of the good things to happen was bancassurance. The governments also realized, the PSU banks also got into the bandwagon. They realized that this was a great opportunity of cross-selling, right? And naturally, if you want to increase your business and your footprint, this becomes a very, very important vehicle in the scheme of things. I'm just putting things together because this is how the entire thing started initially. But now, just look at the digital public infrastructure which has come into being in the last 5-6 years, led by the UPI explosion, I would say. There was a question which came up in the last session which Sameer was addressing. that how do we simplify? Now, along with simplification, there was one last point, if all of us remember, on the persistency piece, which was also picked up in the morning as well. This is where I think bancassurance has done a yeoman's service to the industry. Because persistency has been the Achilles heel for the industry forever, especially in the traditional model when it was led by, let's say, only the agency business. From there, as we pivoted towards the bancassurance side of it, we have seen, of course, there has been a massive shift. Today, the industry talks about anything in terms of 70% to 90% of persistency, right? That's the go-to number. Why I'm talking about these numbers is because it was down in the dumps 40% to 50% 10 years back. What made the change? Possibly bancassurance was one of the major agents that brought that change in. And insurers who have been pure play insurers, when they started, pitching forward their products to the banking channels, we also realized one thing, that these two industries talk in two different languages. That's where Insurtech players like us come into the picture. We are typically like the Google interpreter between these two industries. Banks have very, very specific journeys at their end for their customers. Insurers have very, very specific understanding of their products. The two don't really understand each other unless there is a proper platform and an integration layer in between them. That has happened in these, I would say, old financial clubs in the country. That has happened for PSU, groups, and that has now happened with the open banking, which has now come on forth. Major changes that we have seen, all being driven by just one decision, that bancassurance has to be one of the lead players in the market. Yeah.
Thanks, Ann. And now, Dinesh, coming to you, since technology is a key part when the bank insurance has to work, right? And especially to also provide a kind of the trust, the transparency. So how do you, maybe you can just share your inputs that what the role the technology plays into that, building that aspects.
Hello. Yeah. So just to set the record right, I have not, in my 25 years in sales, never sold banking or insurance, to be very honest, okay? So this is actually...
You are the right guy to comment on it.
So actually treading on very unknown and uncharted territory here. But being on the tech side, run my own startup now from the last 5 years. Look, we understood a segment, which is a very difficult segment called escrow. Within the entire banking ecosystem, we thought that there was a great scope of digitizing the entire system because we brought on a single platform all the multiple players. We were able to get them and automate the entire workflows, right? So I think, look, insurance is something that we've not really explored and seen, but like they said, trust is foundational in any partnership, right? So you need to have, and it evolves and rotates around the fact that eventually any trust that needs to be built revolves around, for us at least, when we were doing fintech. As a fintech, we were doing partnerships between banks and NBFCs, right? And I understand that ecosystem a little more. It was about, essentially about the flow of money. What I've been hearing from the start is how good the distribution is today. But I really don't know in terms of how the money flow is. Honestly, please, pardon my ignorance over here. But I think there is a big opportunity for the entire journeys to get digitized from a trust ecosystem. I think keeping the regulatory requirements in the right perspective. I think there are platforms like Zopper, etc., which are trying to do this in the Insurtech. I still see white spaces in terms of how flows of money could happen. And I think I'll probably talk in the next questions on how we've been able to digitize the entire journey through and how data is really available at multiple instances. Having said that, I just wanted to bring out one aspect, and I think somebody asked the question in the last session as well, is what happens in terms of a claim. Today when there is a claim, I think the onboarding journeys are extremely well digitized. Yeah, there are multiple channels, distribution channels, etc., which do the onboarding journey. I have a 15-year-old who understands zero about insurance today, right? And I think going ahead, I think there is just no exposure to him about what he needs to do. In fact, for that case, my mother had to go through a long ordeal to actually get a claim after my father passed away and stuff like that. So we didn't know where the insurance was bought from. So I think those journeys, I think, are still broken, and I think there is a lot that can be done in terms of being able to digitize that entire journey. And I think that's where I think tech players like us can probably bring about some kind, or Zopper is already there, where those gaps can actually be plugged in. So that's where I think you can, as an ecosystem, look at really doing a lot of stuff. And I'm talking to you from a very outside-in perspective, okay? So
no, this is also required, yeah. Thanks, Dinesh. So I think we got a good deep insight of the Bancassurance, like how it has evolved, where it is, right? So now let's try to pepe in the futures, right? So Sanjiv sir, I'll try to start with you. Like, how do you see that entire the Bancassurance going to be reimagined or getting into futures, and especially when that banks where the sale is through the RM channels. Now you have been also started putting insurance on the digital platforms and mobile banking and all. I'm not sure how much gets sold, but it still largely gets sold through the RM channels and that branch network. So where do you see that entire things evolving from the product to the purpose-driven kind of the advisory kind of the relationship?
Thanks, Dank. See, you have to understand the different kinds of needs. While I talked about 360 degree, there are different kinds of needs that can get met by different kinds of insurance products. For example, a very small event of a flight delay or a baggage lost is a very quick event that may or may not occur, but it has a very finite time. You know, this insurance lasts till your flight lands and you get your bag. Now, those kind of bite-sized insurance, movie cancellations, cricket match cancellations, you have insurance products which serve saying that agar cancel hua to aapke paise refund ho jayenge ya aapko compensation milega. Now those kind of products are bite-sized products which can be bought. Travel insurance, you are traveling abroad, some of it is mandatory, part of it is you also need it. This lasts only for those days of travel that you are there when you are abroad. So these insurance needs, typically they lend themselves very well to digital platforms so that you can go, check the pricing, check basic features and just buy and onboard. Then you have products which talks about 20 years down the line, what can be your possible outflow or outflow for a goal of yours. You know, your kid is 5 years old, you want to send that kid to for a foreign education 15 years down the line, 17 years down the line. How much money would you need? You basically need a good planner, oblique advisor, to work out that goal for you, because there is education inflation to be concerned there, to be taken into consideration there. And what kind of income are you earning? What is your goal? Are you planning to send him or her for an IIM, or are you planning to send him or her to an INSEAD? So those costs will vary. The goal costs become very different. And that needs somebody who understands this with a calculator, with the help of a tool, and sits and then decides as to how that goal should be protected. The banks, the big advantage of banks that we that's there today is that bank is far more aware about the customer, because a customer transacts using the bank. So your inflows, outflows, your salary credit coming in, your outflows, your credit card dues, your home loans, all of that is data that banks have. With the help of account aggregators, I can actually get into, with your consent as a customer, I can not just get a view of mine, but also get a view across your banking relationships. And hence, the relationship manager of a bank has the unique advantage of knowing the customer from a financial perspective even slightly better than the customer knows himself or herself. And hence, they are best placed if they use that knowledge well, and banks as institutions have to ensure that this knowledge is provided in form of tool and information that can be used by these advisors or these relationship managers who are trained well to advise rightly. That would be where the evolution would be from a product-led. Product is incidental then. You are talking about objectives, the goals, and product becomes incidental towards meeting those goals. And hence, that is where I think that it's already moving. It's moving in the right direction. You're already seeing a lot of this happening in HNI segment. Mass affluent and HNIs will lend themselves to this kind of behavior much, much more. We obviously have some rotten eggs because people also get motivated to sell products more than selling right advice. And that's something that no institutions are curbing because, nowadays both regulator as well as institutions are extremely conscious about this fact that I don't want to survive today. I want to build a business for tomorrow. And for that, I need my customers to have trust on me. And banking is all about trust. So I cannot let a mis-selling complaint just get ignored and not take appropriate actions. For example, at RBL Bank, we have very strict governance and action metrics on somebody who tries to go beyond the lines which are drawn by us. And that's only, the need is only to strengthen that. And hence the trust will then gradually keep increasing as we proceed for insurance for all, as Anu said.
Thanks, Sanjiv. So, Anu, you and Sanjiv also emphasize on the customer, right? And you also spoke about the insurers look at the customer-centric approach, right? So, how are insurers reimagining the brand or the product messaging to reflect a more customer-centric as well as goal-based insurance narrative through the bank channels?
So see, banks have different kinds of customers, and this is from my understanding of what I have seen in the specific banks that we are working with. I'm not probably the right person to comment on, what maybe a Citibank or customers of Citibank do. I'm talking about Union Bank of India and Bank of India. My understanding is that they have a the customers are either people who don't understand the basics of finance, and then they are ultra HNI who are running huge businesses, and there they are taking huge working capital loans or infrastructural loans, and so those kind of embedding, I don't think there is any insurer who will say, at least from a life as well as general point of view, that there are certain products that we have been selling. There may be anything from 20% to 40% to 50% attachment ratio for some of the products, right? Where you are embedding it when he is giving a housing loan or a personal loan, or it could be any other, banking product that is kind of attached with a insurance product. So I think one is, who are you selling it to? What is being said when you're selling, right? Because if you see a majority of the complaints that come in and people get, these days everybody tags everything on LinkedIn. So it's very difficult to be a part of an insurer who has either denied a claim or, has given a not so great customer experience. So I think in terms of pricing and product, I think yes, there are certain differentiators. But at the end of the day, most people are treating something like a term plan in a very commoditized way today, right? So when they buy, they probably go and buy the cheapest without really understanding what was the terms and conditions. Now this is for an aware customer who can tag everybody on LinkedIn, right? We are also talking about these people who are also bank customers who have nowhere else to go, and they completely trust the bank manager in a Mofussil branch. So when we are talking about, selling as well as, offering a product, then we need to be very clear. And this cannot be done always in a manual way. There has to be these dashboards, so for instance, in our case, whoever is our, we have about 1.5 crores of PMJJBY customers. When you look at that data, you see that even I am a customer of PMJJBY. And even probably my house, my housekeeper is also, who is a Bank of India customer, a Jan Dhan account customer, even she has, so then it's only through the AI channels, through a lot of data study and, creating products or needs, which you may think that is required by this section, by section A and section B. So the way I look at it is that, products are more or less, if it's a term product, it's more or less the same. Some of the guaranteed products have different features. The younger customer wants something there, they want to only be in a life insurance, they want to be a life insurance customer, but they want a product that is just 3 to 5 years of insurance payment. And hence, there is a lot of complication even in what the customer wants. Each segment has very nuanced requirement. So from a insurer's perspective, what we do is we do a lot of survey, study, we talk to the bank, and always remember distributor's commission is also a very important factor of the sale, and I'm sure Sanjiv will not deny that. So you'll have to keep all of these in perspective when you come up with a proposition, to tie up with a bank or to go to your captive banks with a proposition. So I think it's a very nice and very, difficult relationship. And the only way that I see this working, one, of course, there's a lot of intervention from a digital perspective to ensure that the process is smooth, the customer experience is very clean, clear, simple, easier said than done. At the same time, handling huge amounts of data and coming up with the right set of nudges so that, you don't get maybe the head of wealth coming and saying, what kind of a messages come to me. This is not meant for me. So I think all of this requires a lot of cohesion and unity within different verticals within an insurance as well as banking teams to come up with an experience that the customer will continue to trust you for longer periods of time.
No, thanks, Anu. So, and coming to you, since you work on both the side, and if you look at it on the product side, right, products have also been transforming, right, from the life risk or health risk to the event-driven kind of the scenario that Sanjiv spoke. Now the new risk profiles like say climatic risk or say cyber risk kind of things are changing. So from your perspective, when you work with the banks and insurers, what are the product design aspects that are critical, right, to make the insurance relevant and intuitive for banking customers through the banking channels?
So after asking two very easy questions to Sanjiv and Anu, you have brought a very difficult question to me. Anyways, I'll still try to attempt answering that, yes. As an Insurtech player, we have been, kind of watching the space from both sides. We get a good ringside view on what's happening on either end. We have been seeing a significant shift, I would say, in the last at least 3 to 4 years, specifically post-COVID. I would want to name that because that was possibly one major disruption in the entire journey. What we have been seeing is that banks typically have been mindful, as Sanjiv was rightly mentioning, that persistency continues, the RMs are properly trained, the correct products are pitched, but ultimately at the end of the day, still it remains very much a human journey and an effort. I'm not talking of the customers, I'm talking about the RMs themselves, right? And Anu, as she was mentioning just now, that when you are looking at captive branches, especially PSU branches, having 35,000 branches all across the country, you really don't know what is the range of quality measures that are effective, at the very, very far ends. What we have been seeing, what I've been noticing, is that of late, for different lines of business, I'm talking about life, I'm talking about health, as well as general insurance lines, for banks, they have become more comfortable with those products which give a seamless experience to both the RM and the customer, and the end customer. Which means that while the banks would love to have, on the menu card, all the products, all the versions, all the riders, I'm sorry, I'm using, those technical words here, to be available, but ultimately at the end of the day, we see that they are more comfortable selling those clean line products, as we call it, right? Which is much easier to explain, which is much easier to even train them on. We as Zopper, of course, we are Insurtech partners. We are also partners now in the overall business deliveries. We get involved in the R&Rs, in the trainings and stuff like that, as well as for the banks, because there is a major difference, as I mentioned earlier also, between the languages spoken by the banks and the insurers. What happens typically is then somebody has to come in and pitch in and fill up that gap. And that's one area where, after spending a lot of effort and energy and resources on adoption of technology, we still felt that there was a large gap to be addressed. And this is where we have been working very closely now between the banks and the insurers, and which is seeing a lot of, I would say, mileage coming out. And we can see typically the product structures now changing. I would also now go back to the journeys which typically happen on the banking side. Now that's a very interesting piece. If you look at life insurance per se, you will realize if you just undertake a journey from the bank side, if a customer of a bank undertakes that journey of buying a life insurance product in the bank branch, you will typically see at one point of time, he will be redirected to the insurer's website or portal. Whereas when it comes down to, let's say, a general insurance product or even a health insurance product, it will be an end-to-end journey. The answer is very, very simple. The simple example is because it's a seamless journey, the insurers nor the bankers would want to break that experience. Whereas, as a lot of people have been asking that question, especially when it comes to life insurance, there are so many complexities, nuances, product features, versions, riders, you just name it. I mean, it just goes on and on. At some point of time, I think both bankers and insurers realized that it was much easier to hand off the journey to the insurer to handle the more complex part of it rather than let the bankers struggle with it. Yeah, and this has been happening. This switch has been happening in the last, I would say, almost 3 to 4 years, and significantly now that's happening. We are working with so many banks, and each of these banks, now because of the open format, have tied up with a host of insurers. From every insurer, we are getting almost 17, 18 products to be integrated. Now, just look at 17, 18 products, you multiply with their versions and their different journeys, you have the overall numbers into the number of insurers per bank. We also get overwhelmed at times. But then we slowly started realizing the smarter way is to first pitch those products which have a simpler journey. So it's not only about the product, it's also about how the journeys are being designed for the specific, segment and cohort of customers for that particular bank. Very clearly, for example, Anu is representative of a set of banks, which she just mentioned that, the nature of customers is very, very different than what you would possibly get from a private bank, maybe, which maybe Sanjiv will have a better view on, or maybe even a foreign bank. The nature of customers' requirement will completely be different, and that will define the journeys. So this is a significant shift that we are seeing, Shashank, if you ask me.
So thanks, and I think we're running short of time, but I think I'm really enjoying this conversation. So Dinesh, so coming to you, right, you have heard, right, so how can technology-led, like primarily the escrow kind of technology platforms, right, can build into that trust and the compliance in that kind of the bancassurance relationship?
So thanks, Ayan, for helping me understand the complexity of the entire situation, right? It's 9 into 10 into 20, so it's almost a nightmare. Now I know why every time my wealth manager or my RM changes, he comes up with a new product and he has no clue, and he always ends up saying that, nahi, wo ab hai nahi, ab ye hai. I think it's a lot of non-education that happens, right? But I will say that, I mean, coming to the technology part, right? Look, and you touched upon it, right? There are traditional legacy systems in all of these companies, right? And that's a huge baggage that most of them are carrying. I mean, we talk about so much digitization today. I can tell you the long tail of the entire banking system don't even have basic APIs to feed a simple thing like a balance fetch, right? And therefore an AA model can work for maybe, and I've been in enterprise sales throughout, it could work very largely in, let's say, a consumer facing front. But on the enterprise front, there are too many challenges. And I think bancassurance as a model and a partnership model, which has to, if it has to evolve over a period of time, I think the investment in technology at both the ends is extremely critical. I think, so there are three aspects, right? One is from the technology side, I think legacy systems have their own challenges, and bringing everything on a single platform. At the same time, not really encouraging fintechs or insurtech players to actually play a very active part in that ecosystem. I think there is a lot of pushback. I've seen that in the fintech system where maybe it's also because fintechs have a thing about stretching the rubber band, but sometimes when the solution is right, you really need to stretch the rubber band to actually provide the right solution, right? So you need to build that ecosystem. We are more agile. We can do a lot of stuff with multiple things, and stitch up great solutions for the entire ecosystem. Like I said, there is a little bit of resistance. So we've seen that in the banking NBFC ecosystem, and I'm sure there will be its own set of challenges between the banking and the insurance segment as well. I think second, there's a lot of requirement from the regulators to actually bless a lot of models, the way it moves ahead, how they oversee a partnership. I think it's one thing about saying that there is a whole set of players who are trying to work and become a distribution partner, coming with new products, coming with new solutions, right? But every time there is the regulatory angle. Is there a license that's required? Are you compliant enough, right? So I think the regulator plays a very significant role in actually laying the ground rules for any kind of technology advancement. I think third aspect of the entire ecosystem is the customer. For a customer, like I again said, how seamless is the entire journey, right from onboarding, and whether he's being sold the right product or not. Look, we can all say, Anu also touched upon AI, right? I mean, it's damn good to say that AI, should solve a lot of problems. But honestly, adoption is very, very poor. I know a lot of players who've been trying to sell their AI solutions. They have some great products as well. We've evaluated the space as well. But the cost of running an AI at a very large scale is extremely expensive, right? Companies take a long time. The basic fundamental decision is whether I'm going to do it myself or I'm going to outsource it. It starts from there. Traditionally, banks want to do it by themselves now because they feel that they are the best guys to understand the process and implement it. Again, there's a regulatory requirement, whether a third party can do it, how much they can contribute, etc. As far as the escrow bit is concerned, look, I still don't know whether there is a use case in the entire bancassurance piece. So like I said, we were able to find a niche in the escrow space. We were able to solve a lot of problems of trust because there were two partners involved. There was a basic trust deficit between both transacting parties, and that's the entire solution that we stitched around it, right? So from that perspective, I think we were able to do it, but we'll peel the onion post this, and we'll probably come back, and hopefully next year we should have a good solution around this.
Thanks. So I think I have lots of questions, but I'll not take the time from audience. Maybe if anybody has question, I'm sure there will be. Anyone? Yeah, somebody is there. Can you just give the mic?
Yeah, hi. I'll keep it very short. We all talk about you should provide a product to customer value, right? But in the era when the RMs are changing every day, lightly put by you, and the pressure of revenue generation, so how the balance can be strike off where the RM is having a pressure of generating the revenue to save his job, and how we going to think about the customer? First, he should have a knowledge, second, experience, and third, the ethics part. Because at the end of it, it's a revenue generation for banks.
You'll answer for the banks, I'll answer for the insurer.
Yeah.
Buy directly from the insurer.
Right. Thank you.
I am trying to understand, is there a question there, or you are saying that this is a challenge, so how do you...
It's a challenge. It's a challenge, right? Yeah.
It is a challenge. The only way to overcome this challenge is to start having tools which capture customer information when the RM is discussing. So for example, today we have institutionalized this whole thing that when the sale is happening, final confirmation is over a video call. So a customer consent is now getting taken over video calls, or not just through a written paper signed somewhere. So you'll have to only strengthen it. Fact of the matter is that we are a growing economy. Youngsters are ambitious. They want to move from one organization to another. There is serious job hopping across BFSI and most sectors. So you will have this a real challenge. Trying to say that you can have the same RM coming and meeting you for the next 5 years is like utopian dream today. And not for us, all growing economies have this problem. Only economies that are not growing are having people doing the same job over a period of time because they don't have jobs.
Right.
So we should be in a happy state that we have jobs.
Actually.
But yeah, these are challenges the institutions have to solve.
So let me also give you a quick answer on the technology piece. So a very large PSU bank, I will obviously not name them, which has almost 40,000 branches across the country. They have come back to us because we work very closely with them for other matters. They have said that please install kiosks across branches where the actual need analysis by the customer is taken up on a DIY journey.
Okay.
And that is all captured online, and then it is stored as, just like as Sanjiv was mentioning, like a verification call. And this is coming from a PSU bank. So this is exactly where the entire banking industry is moving towards, and that's what's happening in the bancassurance segment as well.
Right. Okay.
And just one more point on this, on your question is, we have chatbots for customers, right? That you can go on the website and then ask all questions. So now there are the models that people are currently working on in various banks, and I won't name any of these banks, but there are these chatbots are now available internally also. So it doesn't matter whether it is me sitting and facing you, I may not have sold the product to you, but the answer ideally should not be different because I am using all my internal chatbots, which is also running on LLMs, and you will get the right answer. And every time you meet, even if you go and meet Sanjeev or you meet Ayan, we'll all have the same answer. So we will try to make it as seamless as possible, even though the people change.
Okay. Thank you.
Thank you, everyone. I'll not take much of the time. Dhanshri, over to you. Thanks. Thank you, panelists.